ECB stimulus announcement. As I said, they did provide the market with a lot more than was expected. And if we reflect on the US quantitative easing, at that time it was said that emerging markets like ourselves benefited because there was all this excess liquidity and people were investing in capital, financial markets in the emerging markets, which served to strengthen currencies and so on. Can we expect the same now the ECB has provided more stimulus? And in terms of the stimulus itself for Europe, is it going to make a difference? Because they've provided the stimulus already, but it doesn't seem to be taking shape.
Yeah, the problem with the stimulus is you have to have a transmission mechanism, basically a way to get the money from the central bank into the hands of the general economy effectively. What had been happening was the central bank was giving it to the banks weren't doing anything with it. Because they weren't finding enough people out there to basically lend the money to. At the same time, also the banks were under pressure. Remember, the central bank, the ECB, was doing two things. Firstly, it was making more money available. And secondly, it was making sure banks were not as risky as they were in the past. If you're not as risky, that means you're lending out less money. But if you want more stimulus, you have to lend out more money. So that was that kind of conundrum. And so one of the things they've done this time around, as you mentioned, is the fact that they've bypassed the banks to a certain extent and started buying the bonds of some companies out there. So basically lending directly to the larger companies. Hopefully that would stimulate those companies to invest more in the rest of the world. I don't know if it'll be as aggressive in terms of the impact in the emerging economies as they were in the past, just because right now things are a bit more dire in terms of the confidence in the emerging economies. People aren't as confident as they were, say, a few years ago. So you had some money a few years ago, you say, put it in Africa, put it in Brazil, put it in Asia, because these economies are growing much faster, etc., etc. But now you see Brazil slowing down, African countries, because of the commodity crunch is slowing down. West Africa also slowing down. So there might be some money flowing through, but I don't think it'll be as much as we saw in the past.
And just in terms of the Old Mutual decision, that confirmed rumours that came up earlier in the week. They're going to split their business into 4 separate businesses. What's the rationale behind this? And ultimately, is it a good thing for South Africa?
To a certain extent, it is a good thing for South Africa because it means that, Old Mutual basically, at least part of the business becomes, again, more of a South African business as opposed to being, a London-listed business. It's good for the company. The rationale is quite simple. When you have a bunch of companies together that don't quite have, a lot of synergies between them, maybe well-run companies, but they don't have a lot of synergies, people tend to pay less for them than if they were separate parts. The reason being is that if you look at a company that has one business, you can look at that business and say, I understand that business, I know what's happening here, I can figure out how to value the thing. If there's a bunch of businesses together and they don't have, even though they're all in the financial services sector, there may not be a lot of synergies between them. But a lot of business together, then you say to yourself, how do I value this thing properly? What's the value of this? What's the value of that? And often you'll find that people say, because of the uncertainty of the valuations, I'm actually going to value it less than I would have if they were separate businesses. And that's one of the reasons when you have a split up of the company, you usually find value being created for shareholders. Also, there's some regulatory issues as well, in terms of the risk profile of the companies in Europe and versus the US, South African businesses that might make it easier for them to operate if they were separate companies.
With this news, there's been concern and whispers about, is there lack of confidence in South Africa and the rest of the continent? We heard Barclays PLC is going to bring down its shareholding in Barclays Africa, and now Old Mutual is also going to reduce its stake to a minority stake. Does this say anything about the fundamentals of banking in South Africa? To a certain extent,
it also tells a lot about the fundamentals of what the regulatory environment is right now, what the environment in terms of the perception by investors are right now. Africa, like I said, used to be a darling a couple of years ago, but it's not anymore. It's just not. And you can see that in the terms of how companies are reacting in terms of investment to Africa. A few years ago, people were saying it's going to be the next India, the next China, a continent that's going to start growing at 7% a year. We have the last lot of 1 billion people or so that's going to enter the mainstream economy of the world, and that's obviously a huge opportunity. But now with the commodity crash, we have seen a number of companies and other investors out there saying we expect Africa, and what the Africa story was that commodity story. It wasn't a fundamental shift, it was the fact that commodities were so much better, allowing these countries to do so much better.
Very quickly on commodities, we found out today that African Rainbow Minerals reported headline earnings down 51%. Presumably that's the ongoing story in the commodity space.
Yeah. Look, the example I put to you is this. You can't compare these commodity companies to normal companies. Imagine if you're a Ford Motor Company and you made a car, but when you made the car, you weren't sure whether the car was going to sell for $100,000 or $20,000. That's the kind of situation that these commodity companies are facing. Mine is you don't know if it's going to be $100 or $20 for your commodity, and that's the kind of variance we've seen. For instance, in iron ore, that has actually been the variance. It's dropped by 80% from the highs. In that kind of scenario, it's very difficult to plan ahead to make capital expenditures, especially when these companies have to put money down for decades in advance. We don't build a mine for 1 or 2 years. You build it for several decades. And so when the things go down like they are right now, they have to basically hunker down and hope they goes through. Is it enough? It's unknown. If China recovers, as the stimulus plan says it is, maybe it will be enough. If it goes to a long period of slowdown, if China has a hard landing, which is still not ruled out, we could see some of these companies under a great deal of pressure.
Okay, we're going to leave it there. Thanks very much, Viv. That was Viv Govender. He's from Lehumo Capital. More business news for you after the break. Do stay with us.